Hello and welcome back to the Scaling Europe show. I'm Seb Johnson. I have got a cracker of a guest here today. Carles, you have just announced your $15 million solo fund. This is absolutely phenomenal news. For those who don't know you, you're one of the most cracked operators from across the continent. Early experience in Uber, Tractable, first investor into ElevenLabs, fourth employee leading their GTM as they scaled from zero to $200 million. This is super exciting. We love to see operator experience led VCs and emerging managers. So first of all, congratulations.
Thank you so much, and it's an absolute pleasure talking to you. And thank you for inviting me here. It's been a journey, and I'm enjoying it. It's like going from like the operational side of like being an operator, also like being an investor, and also continuing to being an operator while doing investments. Like for me, it's like the best of both worlds.
Yeah, you've had a great experience being an operator, but also being angel investing for a while. I think you've made, was it 70 or 18 angel investments? But before we get into all of that, I just want to ask, like, can you tell me a bit about the fund? So the size, the thesis, what are you looking for?
Yeah. So, $15 million fund, backing pre-seed founders, like earliest possible stages. Average ticket size 350K. And essentially, like I love founders that are very technical, that essentially can get into the weeds of building products, and essentially spend hours and hours and hours. Founders that are like very technical, but also like flexible. They can talk to a lot of people. I can help them like on the go-to-market side with intros, like coaching them on the pitch, like getting to negotiations, all of that stuff. And fundamentally backing global visions, right? Like I'm not interested in founders building for one single market. I'm interested in building like them building something that actually can be replicable, even if it's like with some adjustments in the US or in Italy or like in Germany or like in Japan or in Mexico, whatever that is, right? And fundamentally, like in three core areas, AI, robotics, and defense. 50% of the investments are going to be in Europe, 40% in the US, more or less, and then the rest will be around the world where I find really amazing founders. But I really like the early possible stages where like the thesis for the fund is like building companies over the past like years, over the past 3 years has fundamentally changed 180 degrees. Um, Even if you are an operator. So in Europe, we have this like problem that still like there is not enough operators that actually went into the VC space. So, and even if you were an operator 5 years ago, today the way we're building companies is like fundamentally different, right? Like at ElevenLabs or Anthropic or OpenAI or like Cursor, like we sign contracts, enterprise contracts in less than 60 days, right? So like it just means that like the product iteration is like extremely quick. The way you review contracts, the way you pitch, the way you sign contract, like all of it is fundamentally like is completely evolved. So for me, the thesis of the fund was like, if the market has fundamentally evolved, why not to actually help the founders navigate it? Fundamentally, because I've had the experience of like building ElevenLabs across all of the global markets, from US to Europe to Japan, Korea, Middle East, like I don't know, like India, Latam, and so on. So if I can actually help them with all of those intros, ways of navigating the market, what is important, and all of those things, I do strongly believe that like there is a good opportunity to actually like reaching momentum, right? So it's like finding the actual product market fit, the momentum flywheel that essentially gets you to the next level, right? And that's fundamentally the thesis for the fund. And that's essentially what I've been doing as an angel investor like for the past year. So it would like for me it was important to take it to the next level and essentially like institutionalize it overall.
And so when you talk about momentum, you talk about early stage, you were the first investor in ElevenLabs. You actually then became one of I think the fourth employee leading go-to-market. You can't get more hands-on than that, than actually joining the company and owning a function. How hands-on are you going to be with this portfolio? Do you see yourself playing a very active role in kind of coaching, mentoring, helping them scale and hit momentum?
100%. And you're right. Like I was the first investor in ElevenLabs, and then ended up joining to protect my investment. And I'm just joking, but like to essentially like figure out how to actually launch a company and help them like execute and build the entire go-to-market motion. And it's been a fantastic ride. I'm still like I do it on a daily basis. That's not going away. but at the same time, I also want to help like the next set of founders, right? And I go extremely deep with them. I get into their customer calls. I do interviews for like candidates that they want to bring, like anything that is not technical engineering hires. I introduce them to companies. Like I write posts about them. I help them on like the vision, like any interest to other VCs, anything that actually will help them like deliver like the next phase of growth. I'm all in. And I always like say the same thing, like which is like in every single company that I invest, I would happily drop everything and then join them for a period of time to actually like go and build, right? If I don't believe that I could do that, then I don't think there is value in me investing fundamentally because like I'm not passionate enough about them, right? And about essentially the company that I'm gonna be backing. Of course, that's not practical, but it's like that type of mindset. There's like it like for me, it's like I am building my own company, but in this case, I'm putting money, and on top of that, I'm putting quite a lot of time for them.
Yeah, it's a level of conviction, I guess. It's, if you
Correct.
are willing to join them as an employee, it's probably worth the investment. Did you ever consider joining a fund as opposed to raising your own?
Yeah, 100%. So I actually tried it a few years back. So after leaving Uber, like one of my core ideas was essentially like to go into the venture space. And I was kind of rejected by everyone. I was like, they kept telling me like, no, 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 you don't have any experience. Like you've done a bunch of investments, but like angel investing is not like venture investing in general, and you don't have like the pedigree here. I was like, shit, like this is like actually quite bad. So what essentially, but like thinking back, it was really good because then I get to actually do 74 investments before raising my fund, showing that like, hey, it doesn't really matter. It's my own money. If I lose my own money, it's okay, but it's actually my money, right? And the returns that I've had over the past 8 years have been pretty spectacular at a personal level. So when then I was thinking, and I kept going on the operational side of the business, like building startups, multiple of them. And so when it came to the time of like raising my own fund, I actually did it in 3 months. It's fundamentally because like, well, if you're actually like your thesis is that you're going to be helping founders actually reach momentum, they're going to be very interactive with them, like very hands-on, then if you can prove that you've already been doing it for the past years, and these are the results that you've been getting, there might be something specific in there, right? So when actually it takes more than 12 months to raise a fund, I was able to actually do it in three, massively oversubscribed, but I actually wanted to keep it like relatively small at $15 million. So I think like all of those factors ended up helping and giving me more convictions. Like, well, you might be rejected from VCs back in the day, but like they just keep driving your own path, and at some point maybe it's actually like that you end up building your own fund.
Amazing, yeah. Raising that round in such a short space of time is absolutely phenomenal. And it must speak to the quality of the portfolio that you've got. Can we touch a bit on that portfolio? Is there anything that you can share about the returns that you're generating, some of the best companies, and of course, ElevenLabs? But can we touch on a few of the others and maybe talk about what excited you about those top performing companies?
Yeah. Usually the way I've done it is like I've been investing based on thesis in general, right? It's like how do I see the world evolving over the next few years? And the first ever thesis that I had is I was a very power user for Revolut back in the early days. Um, I actually, like to the point that I actually stopped going to my bank. I was actually in the UK. I was actually using NatWest, still use NatWest, right? And the experience was absolutely awful all the time, and I hated it. Absolutely hated it. So I started using like Revolut. Realized like this is like a brand new way of building like banks. And for me, it was like if they keep going at this level, it just changes the entire experience for customers. It changes the way that we buy products. It changes the way that like fundamentally we interact with our own money, right? And my thesis was fundamentally like if you could go much deeper on it, if like there was a way for them to actually grow extremely quickly and get some level of like virality, specifically on the younger audience, then you'll be able to actually have like a brand new platform to build banking on top of it, right? So that like I saw that they were raising like a very small round on a crowdfunding campaign back in the early days, ended up investing a bunch of like thousands of pounds, and that became the first investment, like very, very simple. And it was very interesting because like then essentially that triggered all of the other ones. I thought like, well, actually, what if I kept thinking about like thesis, and what if I actually keep thinking about like what the future is going to look like? And essentially that ended up taking over the years like a number of theses. I That's essentially how I did it as well with ElevenLabs. I had the thesis fundamentally like Voice was a new infrastructure, a new UI for interacting with the rest of the world and creating applications. And when I met Matthew and Peter, I was already coming from Voice AI segment in the previous company that we ended up selling to Spotify. But for me, it was fundamentally like I had the thesis, met Matthew and Peter. We talked quite a lot about like contextual awareness with like dubbing, like content creation, all of those pieces. And for me, it was actually very clear that like it fed really well in this thesis, or like voices becoming like a new infrastructure layer, right? So ended up committing very quickly and ended up introducing them to a bunch of funds. And we all ended up doing their pre-seed round in a moment that it was extremely challenging, right? So it's all about like that, like uh, thesis, themes that like how you see the world. Sometimes the world pans out like as you see it. Sometimes it actually doesn't happen, and that's okay. But I specifically like unsexy industries, right? Back in the day, like on those two companies, like it wasn't that sexy. There wasn't that many VCs looking to the spaces. So for me, like that's what I feel like you get a really good deal. And I love deals because I do go to market anyway, but you get a really good deal because like all of the VCs are like distracted, like looking at all the fancy, shiny stuff, and they just don't think about like what the future might look like. So by the time they start looking into it, I've already put my money in. I'm very happy. Now I can actually move on to the next industry or the next like thesis that is going to be evolving.
And how does that fit into, or how is that kind of that way of thinking about investments shaped your kind of investment thesis now? You know, you're looking at robotics, defense, AI. You've already made some investments out of the fund. Can you talk a
Yep.
bit about, you know, your vision of the world, your thesis of the world, and where those maybe one or two of those companies fit into that?
Yeah, completely. I think like the world has evolved a lot, right? So I backed like Strawberry Browser, like over a year ago when no one was talking about agentic browsers, for instance, and that was a portion of my thesis as well around like agents becoming part of like your day to day, and that your day to day most of the day is like essentially on the browser side. Today, one of the theses that I have is like AI agents are pretty dumb, right? Everyone thinks they're magical, it's great, collections, customer support, all of this stuff. Like they're pretty silly, right? In general. Like if you truly want to make the technology mainstream, you need to have like the agents that are able to interact with the real world. And the real world means that I go to the like to take the tube or the subway, and like I need to like top up my travel card if I don't use my contactless card, right? Or I might essentially have to like put a washing machine, or like I open the fridge and I need to actually know like if there's any food in there. So there is like a number of things that happen in my day-to-day life that agents are not connected to it. So like what I call like agent to real world, right? So there is a new infrastructure, a new layer that needs to be built around it. There's a new layer of foundational models, which is another thesis that is specifically fine-tuned or like specifically built for like very difficult industries, very niche, that requires a very high level of reliability. So there is a number of like theses that are right now like I'm playing with that essentially is like how I see the world evolving over the coming months. And one of those ones was essentially Strawberry Browser. It's not part of the fund, but it's like something that I did a year ago. I've backed Omnia, for instance, that is like doing generative engine optimizations because a very large volume of the traffic is going towards like the AI engines. I backed Tecker, for instance, through the fund that is essentially doing robotics, and they have like the best robots across the entire market for industrial applications. Really, really amazing and amazing technology. And there's a number of them about like a company that is doing agentic email that it's going to be announcing like in due time, and a number of other companies as well. So it's like thesis driven of how like the market is going to be evolving very, very quickly.
Yeah, it makes total sense. And some of those businesses, you know, yeah, Omnia, Strawberry, amazing businesses that are now getting a lot of hype.
Yeah.
One of the interesting things about your background or experience is that you are part of this operator wave of current AI companies, right? This is you weren't building, well, you were, but as in, when you look at someone like Uber, in your old experience, that was a much older company, part of a previous wave. You spent a number of years at ElevenLabs. ElevenLabs is one of the fastest growing companies across Europe, if not the world.
Yeah.
Absolutely exploded. You've got experience growing and scaling one of the fastest growing companies that there is. What advantage do you think that gives you compared to more traditional VCs?
I think it's the fact that like you know what the reality is on the ground, right? Like building companies is extremely challenging. Like extremely challenging. Like the roller coaster, emotional roller coaster that like you go through when you're building a company, it is extremely tough. It's like it's very easy to see from the outside and try to like help founders navigate it, and just like giving them like some feedback and telling like you need to grow quicker, you need to do this, you need to do that. But it's a completely different game when you're actually building it. And because I've been going through all of the pains that they're going, all of the ups, all of the downs, the success, the failures, all of those pieces, I think there is an element that like they empathize, like I can empathize a lot more with them, be there in the bad moments, in the good moments, and celebrate exactly both of them, right? So how do you take a bad moment because you lost a deal or because like your competitor beat you to launching the product, or because like things were not panning out as you were expecting, and turn it into like a positive thing that where you're learning and essentially you keep going, right? Like for me, like that's the value added that you have. One of the also key components, like founders these days want to be backed by other founders or by people that actually have been very successful and have domain expertise, right? Money today is a commodity. Anyone can raise $1 million and start a company on a pre-seed. Anyone, absolutely anyone, because there's so much cash running around that literally you can raise $1 million. The problem is not raising $1 million. The problem is like you want to be raising $1 million, but also you want to be having help, true, real help, so that you can execute and you can find your key item that is going to differentiate you versus like another 100 competitors, right? And I think that's the value added that from Baobab actually bring that like some of the BCs that are only focused on the capital side are completely missing. And it's like it's in a world where like from a BC perspective, we keep telling founders like, what's your moat? And we keep asking them like, oh, you need to build your defensibility, you need to build your moat. Tell me about that. How are you thinking of the long term? Um, I actually think about it exactly the same way from a BC perspective. Like, if your only mode is deploying money and introductions to other BCs, then you're probably dead as a BC, right? Because you're going to be scratching the top, like the bottom of the barrel for companies to actually invest when the smartest founders are going to be the ones that are actually saying, hey, I can actually get $1 million from you, but I also can get $1 million from all of these other people. Who's going to help me the most, right? And they say, I will go with the one that actually helps me the most. So I think that's the differentiation, and that's how the market has evolved very quickly. And I think we've entered a new phase where like you actually need to provide something else on top of it. And I think like my thesis is like Baobab can do that.
Yeah, and that makes sense. And where do you think that leaves the bigger, more established firms? I think a lot of VCs rely on their brand essentially. Like it's an amazing
Yeah.
thing to get a tier one VC. I guess like in many ways that's their moat. How defensible do you think that is? Just having a track record and being one of the oldest and most established firms, or do you think that's under threat as well?
I think that's on the side as well. I think like you can still play that card. Like we're probably going to be able to play that card for the next 12 months or something like that. But at some point, like it's just not going to be enough, right? And it's again, it's like the money is like a commodity, so like you just need to be helpful, helpful, friendly, also tough, right? And if you're not able to do that, then it's going to be extremely challenging to survive in general, because there's a new wave, and that new wave of like solo GPs that like do smaller checks, but also like become extremely like intertwined with the firms that they're backing. It's just essentially happening. But don't get me wrong, like I think in practice, what it will end up happening, or my thesis is like what will end up happening is like there's going to be quite a lot of consolidation. There's like BCs that are going to be going under at some point, and as such, like you will end up having a consolidated like component of all of this happening industry. So big firms will continue to be big. The question is like whether they're going to continue to have like access to the top deals, or they're gonna like be scrambling to actually like pick up the pieces from someone else, or they will essentially come late because in the early days you might not want their brand, but of course later on if they give you like a crazy term sheet, then you will be taking it, right? So there's always going to be space in the market, but I think like the market is evolving and like firms need to be evolving with it. And even like Baobab, we're starting today, or like we started like 3 months ago, like doing the first checks and all of that stuff. But like the reality is like I do believe like the fund needs to reinvent itself every couple of years. If we're not reinventing ourselves, even in the middle of cohorts of like deploying capital in the same fund, then we're probably going to be falling behind, right? And it's like a thesis that I brought, or like a concept that I brought from like my go-to-market teams, where I've always said like if we're not reshuffling the entire team every 6 months and allocating new responsibilities, like changing the way we operate and all of that stuff, then we're essentially going to fall behind, because like the wave is going to take us over instead of actually us riding the wave. On the VC side, we've been too complacent over the past years. Now, like for me in the VC is like, hey, like let's reinvent everything. And until you don't execute, like iterate on it multiple times and experiment, like and do it on a constant basis, then at some point like you are gonna fall behind.
And
I
what
think like there
was
is some VCs that are doing it super well. Like I think about like A16Z, I think about Iconic, like they're absolutely fantastic funds where like they're constantly reinventing themselves about like how they help their portfolio companies, what sort of funds do they raise, how do they structure the teams, like how do they build go-to-market capabilities. Like those are the type of mentality that actually build a generational fund that actually goes and it becomes one of the best ones in the world, right? That is the type of mentality that we were actually missing on the VC side, that we've been forcing startups to do it for like forever because it was the way for them to survive and become big companies. We need to bring that on the VC side as well.
and was that particularly compelling for the LPs that invested into your fund? And how compelling was that thesis of being, a high conviction value add investor versus having an amazing track record? How did LPs think about that?
I mean, I've been lucky enough to have the best LPs. Like, I mean, I only have like wonderful works for them. Like, Sindana Capital, like, ended up anchoring my fund. I have Isomer. I have like the partners at Credo Ventures. I have like a bunch of partners from Concept Ventures. I have like Cyber Fund. I have like a really good network of investors that have believed in the vision and the thesis since day one, and they were all in, and to the point that like I had to like cut allocations and tell some of them like, sorry, like the fund is fully oversubscribed. Like we went into like 23.5 something like that million like of
Wow.
commitments, and I had to cut everyone down to like 15 million. So all of those pieces, and I ended up taking a very large chunk of the fund as well. So but it's great, like they understood it. They were like very supportive, and I keep getting messages all the time. Well, if you can expand it a little bit, I can put a little bit more tickets. And and for me, like it's fantastic to see. But I have the best LPs that anyone can have. I'm very grateful for that.
No, it's amazing, right? Being oversubscribed, your first fund is absolutely phenomenal. You're solo GP at the moment. You've raised $50 million. You're going to be deploying, you know, into a lot of deals, I think like 30, 40 deals.
Yeah.
Are you going to be expanding the team? Are you going to be looking to hire another partner, associates? How are you going to structure the team to kind of, deploy the capital?
No more hires myself. Keep it simple, keep it lean. I I don't believe in any of that stuff as of now. I think like if you're starting, like keep it as a startup, keep it like simple, don't overcomplicate it. Of course, as you keep adding more deals, and then essentially there is a bigger admin portion that happens that you need to complete. But like the more complex you make it, the more time you spend like managing the admin side and people, the less time you actually end up spending with founders and finding the right companies that are going to give you an extra advantage, right? So absolutely not. Like extremely simple for now. Dedicate all of the money to like investing, and then paying like a small portion of the admin fees that like the fund has, or the admin cost the fund has. But like even on the management fees, like most of it is actually being recycled to actually back founders, right? And that is like fundamentally like what I believe. Like, let's deploy as much as I can towards like the founder community, because that's where the actual returns are for my LPs, but also like for the community.
That's amazing. How do you see that changing over time? Given you've had a massively oversubscribed first fund, is the vision to deploy this, get some good metrics, and then think about a bigger fund two, or a later stage, maybe look at Series A, Series B, or maybe larger tickets at the pre-seed seed level? How can you see that evolving over time?
Yeah, I mean, fund two for sure at the right time, whenever that happens. I feel like for me, I'm trying to build a generational fund where like it's like putting the right pieces and the right like foundations for a fund that like will last for longer, right? I think like pre-seed is the sweet spot that I like, believing in founders, believing in them, their personalities, and like what their beliefs are, what like their visions are, like their technical skill set, like their distribution skill sets, all of that stuff. That's the sweet spot, right? And I think like if we focus on that as a fund, I think we're gonna do really well, because it is where the returns are, and you can see like the entire segment, like VCs that were much more on the growth side, they're coming on the earlier rounds, because that's where essentially they end up finding the returns, right? Like I do it on the pre-seed side. There is absolutely no need to do. Of course, we will end up doing like follow-on checks, for companies that are doing extremely well and everything, but at a practical level, it's the pre-seed. Let's keep building. We'll see about like fund two in the future, whether it's bigger, the same size. Keep it small, keep it simple, no complexities, happy. And you see like the returns, like the bigger a fund gets, the smaller the returns that they make, right? So it becomes a completely different unit economics and dynamics. Very small funds, or like small funds, are the ones that are performing usually the best, right? So if like I'm able to keep it that way, then you might end up raising more funds potentially, but you are actually delivering for your LPs. Makes everyone happy in general. But we'll see, like dynamics change. I don't know what's going to happen in a few years' time.
I always think that dynamic is really interesting. Like the VCs there's a natural tendency to get bigger and to raise
Yeah,
bigger and bigger funds, but there is always a question at which point the fund size has kind of reached its maximum based on,
completely.
what kind of company do you have to find, what level do you have to invest to return a $500 million fund or $1 billion fund. But look, Carlos, we'll have
Or
time. Sorry, go ahead.
or how lucky do you need to get, right?
Yeah.
Because like, and it's like I think like the like the topic that no one talks about in the industry, right? Which is like we're in a power law scenario, and in many ways, like a bunch of companies that like funds have invested, like in just being pure luck, right? Like and I think like you talk to founders, like you believe in their stories, like you believe like what they're doing, how they're doing it, and essentially you end up like backing them after doing quite a lot of due diligence, or like the due diligence that you can do, right? But there is an element of like timing in the market. There is an element of like them being able to execute, having the teams run that surrounds them being the right team, like having the partners that like help them like being the right partner. So there is a lot of these components that as a VC you don't actually manage. But also VCs, we love to actually say, yeah, we did it and we backed the right company. Well, there is a lot more that actually comes into the equation in general.
Yeah. There's so much outside of your control about, yeah, if the deal comes your way and if all the other things line up. But Carlos, absolutely amazing news. Like, I'm really happy for you. This is like a super interesting fund. And I think you're going to smash
Thank
it.
you.
And so thank you for joining me. And again, congratulations.
Thank you so much. It was a pleasure.